Splendid evening, it is to viewers. Welcome to Equity News and Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios. I'm Ibn Mabunda. Let's get started. COMESA Business Council, which has 21 member states across Eastern and Southern Africa, says Zimbabwe could benefit from regional trade with member countries through developing robust supply value chains. With the ratification of the African Continental Free Trade Area, which now has 53 member states, Zimbabwe could benefit from the trade bloc. The AfTA will see the removal of up to 90% of trade tariffs among member countries. COMESA is looking to launch a regional mobile payments platform which could allow and enhance inter-country trade within the region. With a close-up of the digital manager for COMESA Business Council, let's have a look.
Now, what can Zimbabwe do to position itself to benefit from the African Continental Free Trade Area as well as, of course, from COMESA?
Basically, of course, some of the initiatives are the ones that we're currently doing now. Like, for instance, we're trying to make sure that the local suppliers, be it who are the SMSs, are producing products which are up to standards. So the key issue is about standards, having quality products and standards. Because you and me, you agree to say, if you produce a good product, someone will buy it. But if your product is very bad, you do not have any market for it. And that's what is important. That needs to be done. What needs to be done.
Interesting. Now, I do understand that you're also the digital manager for the COMESA block. What is COMESA doing on a digital front to try and enhance business as well as trade within the COMESA block?
So, as COMESA Business Council, what we're trying to do is we're trying to come up with, for instance, like what we're calling a common payment system for the region. You realize that with the current payment systems, it takes even time like to create the payments, but also they're even expensive. So we're trying to come up with some sort of a low-cost digital financial services infrastructure payment system, which is low-cost, interoperable. It should be able to interoperate with other systems, like for instance, mobile phones. Even you can make a payment from a mobile phone or payment from the bank, but also there has to be low resistance. But the whole essence of having this common payment system within the region is to make sure that trade is promoted among the SMEs. They should be able to make payments without any challenges. They should be able to make payments to Zambia. They should be able to make payments to Uganda without having any challenges. And this is the initiative that we are trying to do.
And what has been the response in terms of that particular initiative? Are nations responding to that positively? What has been the uptake at the moment?
At the moment, we're just trying to do what we call some project awareness. Of course, we're not yet there, but so far the response is very good. What we're going to do is we'll have a business case and we'll have a policy framework, and then we'll domesticate that policy framework at national level. However, I can foresee also even a very good response, because nowadays I think most member states are moving towards digital. You and me, you agree today that if I am to buy stuff, most stuffs are being bought maybe across countries through digital platforms.
Yes.
People are buying books on Amazon. People are buying things on Alibaba. So the digital transactions are now is the way to go.
I realize.
Yeah.
Well, thank you very much, Jonathan, and good luck with that, especially this digital initiative. Thank you, viewers, for staying with us, and catch you later. Ciao.
Chairperson of the SADC, who is President of Tanzania, John Magufuli, has called for the removal of economic sanctions on Zimbabwe. He also urged other SADC leaders to join the call for the removal of these economic sanctions. The economic sanctions have been in effect over the past decades and have been imposed on the basis of what the West calls a lack of respect for human rights in Zimbabwe. The sanctions are estimated to have cost the Zimbabwean economy over $30 billion. This is according to a report issued by African Arguments earlier. They should have a look at President John Magufuli shedding light on that particular notion.
I believe in the interest of all parties concerned to see these sanctions be removed. In this respect, I wish also to urge all SADC member states to continue to speak with one voice on the issue of Zimbabwe. Long live SADC, long live Africa, a luta continua. I thank you for your kind attention. Asante sana.
Elsewhere, DAIRIBORD Holdings today released half-year results to the period of 30 June 2019. According to the results, revenue scaled 139% compared to last year's performance, coming in at 118 million Zimbabwean dollars. Volumes grew just 3% to 40.3 million liters, constrained by weakening supply of inputs. JSE listed cement manufacturer with operations in Zimbabwe, PPC, issued a trading update for the 4 months to July 30, 2019, highlighting, of course, the weakening economic fundamentals in Zimbabwe that saw their revenue contracting by a good 35% over the period in question. The update indicated a 25 to 30% contraction in terms of the sales volumes due to, of course, the weakening economic conditions in the country. Feeding into the cement pricing, which was aligned to inflation, was the increased cost of doing business over the period in question. EBITDA declined by between 10 and 15%, while EBITDA margins remained within the guided range of 30 to 35%. PPC has a market share of over 74% in Zimbabwe, with an annual capacity of over 1.4 million metric tons. Border Timbers also in the same bracket, releasing a trading update for the 11 months to May of 2019. Revenue scaled 67%, with the lumber production being lower compared to the same period last year. Higher sales were achieved on the back of buffer stock. Of course, Border Timbers was placed under judicial management after several operational issues went bad within the entity. Now, this concludes our evening news bulletin. Up next is a look at the stock markets in Markets Daily with Anesu. Please stay tuned.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Good evening, ladies and gentlemen. Welcome to Markets Daily. My name is Anis Chimbumu, and let's just get into it. Now, the stock market stretches its losing streak to 6 straight trading days now, after having come off about 2.63% and 2.67% on the all-share and industrials index in that respective order. Regardless of that, the top 10 index did make a huge movement, coming off about 3.82% for it to settle at 149.46 points. All-share index did settle at 167.26 points, while the industrials index was at 556.3 points, which is about 14.21% ahead of its year opening levels. Now, the mining's index is the better performing index in terms of year-to-date gains, as it is up 18.38% for it to settle at 269.55 points, after having let up 0.06% in this in the current trading period. Now Econet, Delta, Cassava, and Insco made huge movements in the negative, which did cause for that 3.82% decline for the top 10 index, coming down. Econet did come off about 3.26, 2.99% for Delta. Insco did come off 3.14, but BAT was the largest move encountered today, coming off 11.79%. While Old Mutual did come off about 3.27%. Now we did notice that within such movements, today we also got an update in terms of financials from Delta, which did not make any movement today. Delta did mention that they enjoyed 139% gain in terms of revenues, whereby their revenue uptick was not actually in line with inflation, even though that revenue uptick was supported by some price adjustments that they made and a 3% growth in volumes. Now, their volumes only grew 3%, not because of lack of demand, but then they mentioned that the supply of their inputs for them to make these products was pretty much constrained, largely because of the factor of lack of foreign currency. Now foreign currency, it being an issue to DAIRIBORD, also did cause for them to suffer an exchange loss of about $5.8 million worth of money there, and such kind of an exchange loss arising from the weakening exchange rate did also undercut the deliberate move that they had made into actually rising their prices, where that price increase was always under the movements in terms of in terms of their prices. Now, for our risers and fallers, where we had about four counters that were ahead, or that went up versus 12 counters that did come off. National Holdings led the pack of bulls, coming up 13.64%. This was quite impressive as it extended on its prior session gains. First Capital Bank, a banking stock which has been stable for quite some time, did add about 6.06% to its share value, while FMP did come up 4.07%. Cassava added 2.39%, like I did mention. Power Speed, on the other hand, did let go of prior session gains, coming off 19.11%, while OK, Chernel and Simbisa did trail that, coming off 18.62, 11.13, and 8.39% in that respective order. Axia did close off that set of laggards, coming off about 6.52%. Now, do not forget to like, follow, and subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do visit our website www.equityaccess.net. Good evening.